What's up, guys? Welcome back to another video, and in this video we're going to talk about imbalances and ways to trade imbalances and how to use imbalances as confluence for your entries and for your sponsor candles and stuff like that. Before we get into this video, check out the links in the description if you're interested in joining the Discord. I also have a link in there to talk about crypto, and then I have another one that it's about a broker, right? A broker you guys can use. It's an easy broker, right? That you can use just to start out and stuff like that, right? All right, so I wanted to make that quick. I didn't want to bore you guys with all that stuff. All right, so let's get into this, right? We're gonna talk about imbalances, right? Boom. All right, let's say this is your right here. This is your sponsor candle, right? Slash order block. Like I said, they're both the same thing. Okay, so I'm gonna just call them sponsor candles, but you guys know they're the same thing. Okay, so this is your sponsor candle here, right? As the market comes down, usually you take a entry off of this. So most people will try to take it in the open right here with their. This is completely the wrong one. Most people will try to take it at the open with their stop loss below, and then whatever the target is. Now we know you can take an entry off of a sponsor candle two ways, right? You can take it off the open, as many smart money people say. You can take it off the open, or you can take it off the 50%. Okay, but what dictates you to take it off of the open or the 50%? Right? What tells you to take it off of the open or to take it off the 50%? How do you know if you should take it off the 50% of it or of the open of it? Right? Well, you use confluences. So what you guys have to know is you can zoom in inside of these sponsor candles, right? And when you zoom in, what do you want to look for? You want to look for imbalance, right? You want to look for that unmitigated price action. You want to look for that gap that price wants to come and fill, right? So the best way of saying this is if you're stuck on trying to take a sponsor candle either on the open or the 50%, right? And you want to know, well, because okay, and you want to know if you should take it on the 50% or if you should take it on the. You want to know if you should take it on the 50% or you want to take it on the open, right? The problem with taking off the 50% is sometimes you have the market come down, tap the open, and leave, right? So when you have that, it comes to the thing where it's like you're trying to guess if you should take it off the 50% or if you should take it off the open, right? The best way to do that is to zoom in into the candle and see if there is imbalance inside of here, right? See, is there a reason for the market to come inside of here? If there is, then you have your confluence to why you would want to take this after 50%. Now, if there is no imbalance in here, then most likely than not, the market's going to react off of the open, right? It's not always going to do that, but most likely than not, because they have no reason to come lower. So you have no reason to take it off to 50%. So if you know that there's nothing inside of this sponsor candle for them to come do, you know there's no imbalance or nothing in here, everything is mitigated, everything is good, everything is filled, and you're taking off the 50%, and then you see the market do something like this, tap the open and leave, that's your fault, right? That is your fault because you know there was more confluence leading to the open than the 50%. When it comes to taking your entries, you want to know where is the most confluence. Is there more confluence at the 50% or the open of it? Okay, so for those of you who don't know what an imbalance is, I mean, I could go over it real quick. An imbalance is basically just a gap in the market, right? So in here, right? But you see in between here, there is no price action. In between this area right here, there is no price action, right? This is known as imbalance, right? So, I mean, a better example is just the live markets, to be honest. Here's an example of an imbalance here. This is an imbalance, all right? Right here. I know some people call it inefficiency, and I mean there's a whole bunch of names for it, but imbalance and efficiency, all of that is all the same thing. A perfect example here of how imbalance is used in the market. Well, look at this price action right here, right? We talked about this. When you're looking at a sponsor candle, one of the confirmations for a sponsor candle slash order block is you want to see it leave some type of imbalance. Why? Because the imbalance shows you that price was going to only one side of the market. Okay, that is how imbalance is left. When there's so much orders being accumulated here and the market takes off, there's no time for the other side to get in. So there was no type of sellers here. There was no type of people that had the ability to sell because the market took off so quick. Okay, that's from them dumping in the positions right here and blasting the market away. Okay, now when that happens, usually price, right? Usually price will want to come back down and fill this because they want to make sure the market is efficient and everyone has the ability to get in and get out, right? So it doesn't mean they have to do it immediately. So that's the thing, is when you see imbalance, it doesn't have to be filled immediately, right? Most of the time it will be filled, but it doesn't have to be filled immediately. It's the same thing with liquidity and with sponsor candles, right? They don't have to be mitigated immediately, or the highs or lows don't have to be rated immediately. Sometimes the banks and institutions will leave those for targets later, right? Perfect example is, you see this, the market just took off, right? Market took off, and then the market came back down. Look where it reacted into. That imbalance. And we had a huge rally away, right? We even broke this structure point right here from this imbalance. And we accumulated down here, but we know we'll talk about that later. All right, so you see the market used this as a target. And once we came down and filled this target, the market took off. All right, here we go. Now, I know this area right here because I've back tested it. So I'm going to just pull up the entire setup. If I can find the candle. Here it is, 48-minute candle. Okay, so this right here is a sponsor candle. Okay, this right here is a sponsor candle. All right, it's also an accumulation. You know, for those who are good at, you know, spotting Wyckoff, you have your selling climax, automatic rally, secondary test, up thrust after action. You have your secondary test phase B. This is your spring. Boom, boom, boom. You have breaks your suffer. You have a sign of strength. And then this would be your test, and there's another accumulation down here, right? But that's not the point here. But so if we're looking at this from just a smart money perspective, right, we don't even have to put Wyckoff into it. This is a sponsor candle. Okay, this right here is a sponsor candle, and the market rallied and we broke structure towards the upside. Okay, cool. Now, if you're looking for entries inside of here, you have many possibilities, right? You could take an entry off of the open, right? If you want a 27 pip stop loss, you can take an entry off the open, or you could take an entry off of the 50%, right? I'm gonna do like a, let's see. I was gonna do a rough drawing, but I'll see where it's at. Off the 50%, and that'd be like a 14 pip stop loss, which is not bad. I mean, that's I like to keep it under 7 for me, but I mean, some people can do that. I mean, if you can, if that works for you, go ahead, right? So you can do that, or you can go inside of this candle and see where it's the imbalance, right? That's another option. So let me go down. We're gonna go down. We're gonna see what is not mitigated inside of here. Where does the market actually want to come and fill? Where do we need to fill inside of here? Right, so I'm going to go down to the 15-minute. I don't know if it'll let me go down even further, but there is an imbalance down. Okay, here we go. Here we are. Let's see. 14, 15. Okay, it was supposed to be the 15, but I mean, it is what it is. There you go. Here is the imbalance, and that's another reason why I tell you guys to use multiple time frames, right? Multiple time frames. On the 15-minute, you have no imbalance here. 14-minute, you have an imbalance, right? 13-minute is the exact same thing. That's why I tell you guys to use multiple time frames. Okay, so instead of you taking this entire candle, this is your candle now, down here. Now you have a 6 pip, right? You have a 5.5 to 6 pip stop loss here now, right underneath this candle right here. Sniper entry, and you have a way better RR than you would have if you did the 50%, right? And another extra thing I want to show you guys with the fibs, right? I know you guys noticed that I have the 80 on here. If I draw this out, you can see that the 80 damn near matches the exact same entry, right? So that is another area that I look for. I look for the 50% and the 80, and I do the same thing with the 80. In order for me to take the 80, which is even lower than the 50%, right? That's a less probability of me getting this. I look for the imbalance, and this matched the imbalance exactly to the T. This is exactly how I found the imbalance. Because when you draw out your fib, you want to go to the exact 50%, see if there's some type of confluence there, see if there's type of imbalance there that the market will match up to. And guess what? If I go back down, we actually do have an imbalance right here. You guys see that right here. We have an imbalance, right? The market came and filled this imbalance at the 50%. So we did tap the 50% and we got a rally, right? But there's more imbalance down here, right? Everything is not filled yet. So if they're going to be successful with this buy and they want to get like a clean buy, they want to get a clean rally towards the upside, they want to fill everything so they can just launch, okay? So it'd be more efficient for them to actually fill everything before taking off. So more likely than not, they're going to come down here and fill this imbalance, okay? So we reacted off of this 50% imbalance, right? So even if you would have took an entry here, you would have been still correct, but there's still more imbalance down here that the market wanted to come and fill. So this is another entry. You could have had 2 entries on this if you really wanted to, right? You could have set either like a double entry, like you could have set an entry here and then an entry here with your stop loss underneath this low. You would have taken an L on this, but this one would have covered you big time. Or you could have taken a bigger stop loss on this one with your stop loss somewhere down here for like a 12 pip, and then you would have had like a smaller one so you can get like better RR on this one, but you know that you'd be in the trade for sure, okay? Or you could have did something like that, right? But the point here is to look inside of these candles for the imbalances to know where to take the entry off, all right? So I mean, that's all I wanted to cover for you guys, to show you guys a quick tip. Hopefully it helps you guys a lot, and don't forget, join the Discord if you're interested. Great community, great people in there. We're learning a lot. We're doing big things in there. So if you guys want to join, let me know. You can check the links in the description. Let me know what you guys want to see, okay? Let me know what you guys want to see. Let me know what type of videos you guys want to see. I am going to look to do another giveaway. I don't know when. I don't know like what goal or whatever I want to do it in, but I am going to look to do another giveaway for you guys. But that's pretty much it for this video, guys. I hope you guys enjoy your trading week, and peace out.